Ahmad's got a new addition to the family.
Yeah, all right. Hey, good morning, guys. Ken at Tortoise Capital. This is the Foundation's office hours for July 2nd, 2023. Welcoming to everybody here and certifying the welcome announcement to Hamad's first child. All is well with Mama and baby. And he is looking forward to being wrapped around her finger for the rest of his life. So we were just sharing some stories about that before we got started. So I'll ask you, there were no specific questions submitted. What I thought I would do is just, I wanted to go back and revisit a couple items that hit really hard for folks this week that I want to just reinforce. One of them was associated with this diagram from our last Q&A that actually has kind of been on fire, and it's been this idea of replacing beliefs with evidence and why that matters. Let's see. I'll turn on original sound. There we go. Yeah, so I'm not going to replay that whole speech, but it was just the idea that one of the things that came out of this was something that Mike M. found very helpful in our discussion with Damien. We had a little impromptu coaching session from the Friday night workshop, and that thing was so good that I put it in as the introduction to the Foundations course, because we went through a trade framing process with Damien about how to think about risk with your rational mind, which is associated with confidence in the pattern based on evidence, and then risk as associated with your emotional mind, your gut check, which is concerned more about the possibilities of risk in the world that have not yet been seen. And that's two different minds at work, and they both have to be reconciled. One of them has to do with the production of confidence, which is based on evidence of a pattern that's been replicated many times and it can be found in nature and gives you something like, how does the world work and how confident am I that this thing could behave the way that I've envisioned it for the 2-to-1 advantage. That's one way, one element. The other side of it had to do with reducing anxiety, and that was comparing the sense of unquantifiable risk or the feelings of risk that come from our emotional risk manager and finding ways to reduce that anxiety so that that part of our mind is satisfied, so that we can trade this pattern at a level of anxiety that allows us to let the rules be the rules. And so having that twin mindset seems to me to be an important touch point that came out of that discussion. Mike and several other people just sort of unsolicited sent me comments on that. So my spider sense is that is a really important discussion. I'm in the background. I'm producing that as a separate video lesson to pull it out. We also kind of went through the how to think about that in assigning levels of dollars at risk between $1 at risk and then 1% of portfolio, and how you use that sliding scale as a way to help the intuitive risk manager deal with anxiety, starting with $1, and how far up the scale can I go before I start detecting anxiety. And there's a certain, I think, a way to do that to find your comfort level in an objective way that helps the anxiety manager learn to start trusting your decision making, that you are really taking into account your internal state, which should lead to improved confidence in the moment. I'm not saying we're ever going to eliminate anxiety. That would be I personally need anxiety. I need to have skin in the game in order to trade at my best. So that was a discussion that came out of this diagram on Friday night that I can highly commend to you. And it reminded me that Thursday night, just the night before, I had been sitting in a doctoral dissertation defense with a gal who was taking a look at how to incorporate emotional intelligence and youth development into high school curriculum in Texas, which is not the first place that you think of when you start thinking about holistic education and appreciating the diversity of people and maybe preventing bullying of our vulnerable populations and allowing people to learn in an environment that is protective of their inner needs. And so she had put together, and their school had put together some a 1 or 2 day program on allowing people to share their emotional touch points and places where they'd had troubles and places where they'd found strength. And it was built around this emotional intelligence model that I'm also learning about in my own coaching program. I'm going through a International Coaching Federation certified program of whole person coaching that has a lot to do with this sort of emotional side. And so these are 4 areas that are generally associated with an ability model. Emotional intelligence, what does it mean? What kind of skills can we say can be found in emotional intelligence? What can I do with emotions? And so perceiving, facilitating, understanding, and managing. And everything that's coming out of this is really consistent with this particular model of skill in the world when you have emotions involved. So I'm finding some reinforcement in the world of scholarship, and it made it a very interesting dissertation defense, because we went through some of the ways in which we can, as leaders, guides, parents, coaches, facilitators, help our younger people become who they are and protect who they are and support other people as they are in the world. And as a new father of a beautiful baby girl, this will be on your mind, Hamad, as you watch her developing, and you watching her finding her gifts and engaging in the world, and watching what the world does to the dreams of our kids, to the feelings of our kids. And there's nothing that'll make you more outraged as a father as the suggestion that somebody is stepping on your little girl's feelings. And my daughters knew that about me, and so there were some things that happened to them in high school that they didn't tell me because they were worried about what I might do to overreact against the perps, the bullies and whatnot. So and that made me feel like maybe the way I manifested my emotions in front of them was not ideal. Because if they were worried that I might overreact, that I might lose control of my emotionality with others and do something I might regret and that they might regret, they were trying to protect me from their perception of how my emotions might be. I mean, they know how protective of them I am. So this has gotten us into some interesting discussions and negotiations. It's affecting the way that I am as a coach with young people at the soccer camp, and how we're trying to identify bullying behavior early or teasing behavior early, and trying to build some positive emotionality. Well, I say all that simply to say I don't see this as disconnected from what we're doing as traders, because I think we've inherited an emotional matrix, an emotional overlay from our significant events as kids, and from our culture and education and experience and our working lives, that we've put emotions in a certain place and we deal with them in a certain way. And to the extent that's part of our trading makeup, the way that we plan and prepare to deal with our emotions when we are confronted with them in the market is central to our ability to follow the rules that we've laid out. So I think that emotional state control is more important, to be honest, than the particular rule set of a pattern, because as we've seen from Kata 2 or the Collapsing Dragon, the rules can be rendered in pretty simply. It's sort of it's our interpretation of them, of the anxiety we feel as we're coming close to the moment of decision, the feelings we have in the moment of decision, the consequences of those decisions, and what we do with the spin-off, the feedback from all that, feels like it's more important than the particular rules themselves. So that's what I wanted to say about the week that has just passed and some of the key highlights. So we'll have more to say on that in the future. But I wanted to just sort of set the table with that. So, who had some? Was it Greg that had some comments or?
Yeah, I have two things. I have just a comment. I noticed
Yeah,
that when you talk about the emotion and the trading rules,
yeah,
from my perception of it is I think a lot of the trading world today is so focused on beliefs and emotion that there's such a focus on this where they're saying, oh, your psychology, and meanwhile they're not getting any results and they're just so focused. So when you talked
yeah,
about evidence,
yeah.
um, that to me was like, oh yes, that was thanks for focusing on that because I'm getting a lot of focus on the belief stuff. Um,
Yeah, I
so
mean, it's part of that is the. I mean, there's a lot of pop psychology out there, and some of it's good. I think I would, if I could put a name to it, the sort of the Tony Robbins school of beliefs or everything, or the Gary V or Gary Z, whatever. Um, Believing is being. In a lot of ways, I'd say that's true. If you're talking about sales and persuasion and team building and some of that stuff, but there's a limit to that. You know, at the other end of that spectrum is kind of surgeons, bricklayers, auto mechanics, um, industrial manufacturing for products that you rely on for your life. I'd sort of like to know that the guys that are doing that are competent in their skill and that the things that they're doing work, independent of how I'm feeling. Like if I'm crossing a bridge, I'd like to know that on that guy's worst day at work, when he never felt worse, that the work he did was so professional and to standard that the bridge is going to be just fine when it's carrying me and my family. And certainly there's a lot of beliefs and psychology and trading, but the more and more I work with this, the more and more important evidence is for me. That I'd like to have. I'd like to work on the feelings that I have about a system that has a solid basis of evidence for it, and that is not relying on my beliefs to work. Um, and so how much, how much should our system be, interpretation, and how much should be um, rules based? And this kind of gets to reminds me of a discussion I had a lot with Van and rules and discretion. So imagine there was some kind of 50-50 basis in there, you know. Maybe that's the better way to describe it is that way. Is I get some kind of which way do I tip? Um, when I think of that trading system as part of a system, self, and market, I drew that poorly. It should be 3 overlapping circles, I suppose. Yeah. So if I have something like self, systems, and the market, my sweet spot is going to be this region in here where the system that I have is appropriate for the market and its current condition. So that relationship is strong. It's independent of what it is that I bring to the table, the system is well suited to be trading in that market while that market is behaving the way it is. So we want to check that alignment. If that alignment is good, now I can say, what's the alignment between? And by the way, that's the first place that I check. You're talking about evidence, and I've never really said it this way before, but that's really the first place to check for the alignment. And I guess I would say I'd put, before I ever even do anything, I better be able to describe the market that I'm trading and all its character. So if I were to pull this out and say, hey, here's a list of characteristics of that market, I should be able to document that with a great deal of precision. I should have knowledge of what that market is. And then the system, also at this kind of, before I do anything, I should have that thing pretty well darn documented. What are the rules? What are the targets? How do I get in? How do I get out? That's knowledge level, which I can study separately from the market. And I better have all of this work done too. Those things are a precondition before I can even talk about the intersection of the market and the self, or market and the system. But now when I'm checking for integration and appropriateness and alignment, I guess I would talk about this one as alignment. The first of the 3 places that I could check between me and the market is this a market that I feel that I can trade and is right for me and all that? I mean, I don't even think I can say that without saying what kind of system do I have. And that gets to, I think, your question about about beliefs. My beliefs about is that market right for me is ungrounded. I wouldn't even start to think that way until I had a focusing lens of a system to do something about it. And if I can design a system that is appropriate for that market, then I can do what's needed to add myself to that mix. You know what I mean? I have 100% confidence that I can do what's necessary to complete that part of the puzzle. The thought that I couldn't do that doesn't even cross my mind. Because if I couldn't, I just wouldn't trade it. Done and won. So I'm flexible enough as a person and able to follow rules to such an extent that if I can find a 100% rule-based system that can trade this market, I've completed the alignment portion of the system, self, and market. So that's the first thing that I even look at. And I think it comes from just a confidence in knowing myself that I can the systems that I'm designing, even as I'm designing them and I'm starting to put together the parameters, I'm doing a check on self already. So it's sort of like, does this, and I've already learned that if I take a system like the washout, I took 100% set of beliefs that I had about the market, took the complete opposite of each belief. I took the anti-belief and then built a system out of that, and it became, for about 5 years, my number one go-to system. So that tells you everything you need to know about my beliefs about how important beliefs are. Not a bit. Specifically. Although the belief that I just articulated, that I could take the 100% of my opposite of beliefs and develop a system that became my number one production system, well, that's actually a pretty powerful belief about beliefs, if you think about it that way. But how important any individual belief is as a component of a system and understanding the market, not at all. What was important was the internal integrity and the consistency and the completeness of the system, which included in its rule set the kind of market that it was appropriate for. So that's why I would say where I'm at now is that the first place for integration is checking to see that the evidence of this system and market says that, look, start with this. Start with the 100% rules and see what those results get when you have 0% discretion. So start here. You know, if I had a system that couldn't make money here, then to say, well, I'm going to add my discretion, and now suddenly that thing is going to come. It's like above the red line. You know, down here it is negative expectancy, and up here it's positive expectancy. If I had some rule set that by itself couldn't make money, and it wasn't until I had applied some amount of discretion to it, I don't have much confidence in that, because I know that my discretion is very vulnerable and it's costly. It is very costly for me to maintain some kind of experience base in a box and my performative brain, P for performance, and that's an expensive asset to then make a negative expectancy system expensive, because then I wonder, if all the value's coming from this, why am I starting with rules that don't work by themselves? I think it would be better to go from a system to a system prime, which says, hey, what if that thing is already starting above the zero line? It's already starting with positive expectancy as a pure rule-based system. It's above zero from the beginning, and now I can tell you, hey, does my discretion add extra value? What's the extra piece that I'm getting by adding value? And then as I start progressing from rules towards discretion, what is the shape of the curve? This is something where, oh, the more discretion I have, the better it performs. Really? What's the evidence for that? What's the evidence that every intervention that I take to overcome the rules is continuing to push that thing up and to the right? Is that really the case? If that were the case, I could be at some place over here where I have no rules, just right, to borrow the phrase from Outback restaurants, right? Where I had a really good pork chop the other night and a steak. What was best was the shrimp salad, though. So is that what the shape of my discretion looks like? That's the shape of my TQN for that system. Maybe it looks like this. My spider senses that's probably more likely. I would expect it to, if you could get an initial burst where a little bit of discretion gives me most of my payoff, that to me is the superstar way to blend rules and discretion. Now, what is it about this curve here and what I just described that says, oh, it really matters what your beliefs are, and then your beliefs are going to drive performance, as opposed to evidence? It's 100% evidence. I want some evidence that the discretion that I'm using is making a difference in the rules that I've found. Because my spider sense is that the rules are related to something like human nature in the markets, the way humans behave in the market. And that as a human who is developing expertise in human psychology in the world, that there are moments in which, under certain circumstances, when I add a little bit of discretion or an optional rule, that I get this improved performance under those specific conditions. Now, if I can document, and that's the point of the trading journal. Your master craftsman's book. Your master craftsman's portfolio is simply say, this is the frame that I started with, the blueprint, and then as I felt the wood and felt the environment and saw opportunities, I added a little discretion, and then this is the result, the prime result that I got, and I'm documenting that in my portfolio. And then as I continue to add those case studies, what I'm doing is creating the evidence base for how my discretion is improving the rules. So now I would say what's the evidence basis for your discretion? What is the evidence basis that the rules you're using are making a difference? That's my current thinking about beliefs and evidence. And then I would just say that the rules of the shop think of it as, in a guild of master craftsmen, the rules of the workshop are the things that are creating the wedge of safety. So if I've got this little performance graph, and this is the one where this is the objective one where every extra piece of discretion that I'm putting in is producing this upward performance. And let's remember that this is actually going to look like this. That I don't know what the limits of my discretionary skill are, but I'm approaching it from this side of it. Now, this is where the guys who believe in the power of transformative beliefs and all that will be able to point to evidence from their domains to say, hey, if you just you look at you're just fucking grind, pardon my language, you're just grinding along here like some little turtle or some little ant. And really what we're going to say is, look, if you just adopt these transformative beliefs and incorporate these behaviors, now suddenly in the domain where you're working, it's suddenly going to get that much better. Maybe that's true. Maybe that's true. And I just look at the this is the sort of the seductive. Well, how many people, what's the evidence for that claim? How many people are in the population that adopted that mentality, and how many get across the line? And then of the ones that can't get across the line, what's their performance numbers now compared to their performance numbers when they were grinding? I don't know. Do you ever see any of that evidence from people who make these claims? I never do. No, and why is it? Because those guys say, look, it's not the, here's the typical argument that you will hear him say is, look, these people, they just didn't believe hard enough, or they didn't try believing long enough. So it's never a problem with the claim that transformative belief changes and is possible. It's always, hey, you know what? It was your fault or your condition. You didn't believe hard enough. You didn't believe long enough. And it's a self-fulfilling prophecy that they will use as evidence. You see, the fact that you stopped proves that you never had the right stuff anyway. So of course you failed, is because right from the beginning you never really were all in, because there came a moment when you decided to quit. So then the people that say, oh, okay, you're right, I believe that, so I'm going to put it on myself and say, well, you know what, I'm just going to keep going then. And then as long as they never stop trying, the person who's saying transformative beliefs can say, well, it just isn't the time yet. You haven't hit the boulder long enough. And then they'll use some kind of analogy like, well, there's this great big boulder right here, and then there's this little guy, this little craftsman with a hammer, and he hits it here one time and nothing changes. And then he hits it 50 times and nothing changes. And after the 1,000th time, the boulder splits into two. Oh, okay. Got it? So just keep hitting that wall, and eventually it's going to, their argument, the implied belief is that, hey, this conceptual wall of success in your chosen endeavor is exactly like a boulder that a guy's hitting with a hammer. And so they're using a metaphor and in an analogy which says, well, that's a claim. What is your evidence that this transformative belief that you're lecturing me about is exactly like a guy literally with a hammer literally hitting a boulder? Why did that guy choose this boulder? What is it that he knows about boulders and how to hit boulders that tells him with confidence that somewhere around 1,000 strikes that thing's going to split? It's the evidence of all the other stones that he's worked with. Or did it just come out of the blue? He just decided walking along the road one day that he was going to split that boulder with a hammer. How many guys have done that? Oh, you don't even know if there were 1,000 guys who spent 1,000 lifetimes hitting that boulder, and now the 1,001th guy came along and he hit it 1,000 times, and it turned out, I learned that if I hit a boulder 1,000 times like that, it's going to split. No, you don't. Because you don't know that there weren't 1,000 guys with 1,000 hits, and that's 1,000,000 times those guys hit that boulder. And the guy who gets the payoff is this guy. So, my beliefs at age 65 about transformation, I understand that argument completely. I get it. And I also look around to see what are the things that endure. The things that endure are the things that are built by craftsmen and engineers to stand the test of time. I'm interested in building things that stand the test of time, that are rules-based, where the actions that you take actually change the world, and that the rules of the workshop are to find the things that produce the results and then use the rules of the workshop to place a wedge so that we don't get backsliding. That's all. I understand fully the power of transformative beliefs and all that. I see that in so many ways in my life that you don't have to persuade me that psychology matters, but judgment also matters. And that is, of all the things that I could choose to be having transformative beliefs about, when it comes to trading, just show me the rules, show me the evidence, let me independently validate it, let me find out the actions that are adding value, and let me see it replicated in time, over time, and then I can figure out from the rules and my discretion what is the shape of my trader quality number. And if you give me a number of systems, and I can draw the line here and say, these ones are not positive expectancy until I apply this much discretion, let me start with ones where it starts off positive expectancy, and I have to minimize the amount of discretion, and let me just run those things like a machine. And then let me start investigating what the shape of my trader quality number discretion, because that's the one I want them already over this line. Those are the ones I want. So when I look at stuff like Jeff and Ken Hum and Bill and Jeff and Griff and Phil and my brother and Jeff Boccaccio, and as well as Jeff Southern and Luke with the 5-minute Aussie, when I can start with systems that are already with no discretion required on that side of the curve, and then I can see ways in which I can rapidly improve with the minimum amount of discretion, those are the things that I'm looking to add. And then as you start finding things, what are the things that with my trader quality number now seem to work for me across more than one system. Now I'm finding ways to create my own style, my own personal technique. So as I come back to this, self, systems, and market, boy, did I draw that terribly. Should probably, yeah, so if I go to this, still not very good, but I'd actually like to reduce the smaller and smaller this psychology is over here, the more I'm emphasizing market and system. And so the first place I check really is this one. So the less that I have to do to make that system work, the better I like it. And then when I realize by reducing the amount of myself in it, I'm actually hitting the sweet spot. We're now system, self, and market. But that's the first place that I would say check the check for alignment, because that requires zero beliefs. That is 100% evidence. And I'll tell you what, it doesn't take much. If you can get a 0.2 expectancy with zero belief required and zero, you give me a system, I'll tell you what, you give me any system that has 0.2 expectancy, and I'll bet you that I can find a way with my psychology and trader quality number to make it better. And the reason that's a no-lose bet is because if you bring me a system that's 0.2 expectancy, that's 100% mechanical, and I can't find a way to improve it, what do I have? I have a system with 0.2 expectancy, and I can make a living on that, because that's a 20% return on capital. What if you could only get 10%? The world was built on 2% after inflation with leverage in banks. That's what banks do. 2%. So if that's the first place that I would check, I guess the second place that I would check is this notion of system and self. And the reason that's actually probably easy, I don't know if that's second or maybe that's third. I guess I spend so much time on checking the first piece of alignment that this one is so important that I'm not even sure which one of these is the next important place to check. I guess the alignment of self and market is I have to be persuaded that I can participate in that market. But if my sense of alignment is so good that the system and the market is like, dude, I can do it simply by being 0% discretionary versus 100, and so I can be up in here with a system that requires no sense of self, so that's good. And then the self and market is how long does it stay open? Is it robust with respect to the future? And is an opportunity that's going to be there a long time? If I believe that, if I have reasons to believe that, then my third point of alignment, yeah, I'm in a market that works. That's sort of like why I like trading the S&P 500 and currencies and commodities, because that's what runs the world. people are going to be doing that for the rest of time, or as long as they need to eat, live, have shelter, and engage in commerce. So as long as I'm in a market that is somehow connected to the business cycle and the life cycle, I'm okay. Hey, let me pitch you on this little market, and I'm going to say crypto. And so, is that really going to last forever? Maybe it is. Maybe it's a poorly chosen example. But when crypto came along, I didn't stop doing this simply to embrace this because it was the newest thing. No. If as long as I'm trading things, let me trade things that have a lot of history and data and frequency and interest, the size, and that tells me this thing is going to be around forever. And as it changes, my adaptive systems and my ability to adapt will keep me into a market that has volatility. I want markets with volatility. That's my guarantee of psychological success in the future, is because I have a very comfortable relationship with volatility. Lack of volatility makes me uninterested. What is that even? That's a passbook savings. In fact, the less volatility, the more likely you are to be on the losing end of that. A bank savings account is simply providing raw material for guys to go be volatile with against other people that are greedy. So how does that work? Oh, professional traders who understand volatility pay trivial interest to people who are saving capital and then using instruments for the greedy and the fearful and the amateurs and the hobbyists. In other words, this is the professional and this is the not professional. And so they are using volatility as a way to reliably make the herd go through periods of joy and pain and extracting a reliable rate of return, which allows them to pay the interest on the capital. Done. So if I had a belief about the marketplace, that would be a belief. A belief about their beliefs. So who are the people getting pitched all the time about transformative psychology? All the people who are looking for shortcuts to improve performance. So study that. Study the psychology of transformative teachers. And in the world of trading, my recommendation is that you notice it, understand it, make an intentional decision to act on it, if you will, if you must, that's based on actual evidence, and then make sure that your wedge allows you to capitalize on any positive payoff that comes from that. Now, do what you want with transformative beliefs and all that stuff out there. But, he's a showman. Gary V. He has about 1 minute of teaching. All the time. everywhere on autoplay, plus all his little true believers. Well, Gary Vee says he doesn't even have to say it anymore, but he's got about 1 minute of ideas. And Tony Robbins, is there more than 10 seconds of original thinking in there? It's all delivery. It's all performance. So write your own book is what I would say. And I don't know of any shortcuts to that, to self-sufficiency. I don't know of any. And it's not like I haven't been searching for 45 years in the markets on that all the time, 100% of the time. And know how to raise my stops. This is 100% of what I know. When I get out into truly new territory, uh, beats the hell out of me. Nothing in my human experience says I know what to do there. So hopefully I made money in the human space and can just put a trailing stop and have this position paid for with markets money. That's all I know. And then this may have fallen far enough that, depending on the shape of that curve, does that look like something that is prone to downside movement? 100% trade framing. Based on evidence. Math. Skill. No belief. 100% attention. Pay attention. So that's what I wanted to say today, Greg. Was that does that answer your question about
I
beliefs?
think awesome job.
Push button. We'll talk. All right.
On
Yeah. Go
Go
ahead.
ahead. Okay, I was gonna. If I have 5 more minutes, I'll take it.
Sure.
I'll open it. On building the wedge rules of the shop, I know we
Yeah.
have a lot of patterns for entry,
Yeah.
SSC, OR3, so on. And
Yeah.
I'm trying to build patterns for the exits because in myself to build that wedge to try to remove some of that discretion, I'm trying to say, okay, when this scenario occurs, just like we do for entries, this is when I'm going to switch to you know, the Bollinger Mean or the Wu or whatever. So I'm looking for the patterns of exit. I wonder if you had any thoughts on that.
Yeah. At its most primitive level, if I'm short, what is the first piece of evidence that tells me it's now worth a shot to go long? 1, 2, 3 entry after a harsh winter. So if I'm short, isn't an MMRB after the peak of the RL10? Isn't that isn't that reason enough to say that I have an exit here? Yeah. So there are so in that course there's the 5 exits. There's a 1, 2, 3 exit. There is a an RLXD exit. There's sort of like the owl entry in the other direction is an exit. There's the idea of the Wu-Wei exit strategy, which uses a combination of, like there's a sniper element, and then there's the manager element, and this guy is the conservative. And that can be, you pick a conservative indicator-based rule that satisfies you that you were 100% rule-based and got out. I normally suggest start with the Bollinger Band mean. And the sniper, I say start with the PSAR and price, and then adjust based on your trader's feelings. Right? So if that thing is now going up, here's just a flat ass rule of the shop, by the way. If this is my Control Z, if this is my Z3 line, and price kind of ever did this, that is such an automatic exit on the dragon horns. Make sure that's the strike. The first one is your inner anxiety won't let you stay in any longer. That is the first best exit. Strike. The dragon horns, where it got outside Z3 and then made lower highs instantly. As soon as you get even to the Z3, but don't even let it get to the Z2 or a 2-bar low. Instantly strike. Get out. So then the Wu-Wei exit simply says, the strategy says, I've got a sniper, a feelings-based tradesman, craftsman approach that is aggressively trying to preserve the win on half the position, and then a managerial exit which said, from the time that I started this thing, I was going to take this successful trade I know is over if it reverts to the mean and then fails. So the Bollinger Band mean is the slowest possible mechanical exit that respects the idea that this was the start of a new trend. If that thing goes that far and then reverts to the mean and then starts going beyond, there is no justification in the world that is correct with respect to that initial reason to get in, the hypothesis to get in, right? So the most conservative mechanical rule that says I stayed in as long as possible until there was absolutely 100% no doubt that that move was over. That's the reversion to the Bollinger Band mean. Why does that work? Because sometimes after a harsh winter and we get an initial burst that pulls back, we start getting a series of kata 2s that somehow keep working until they no longer work. And the harsh winter that got us in is usually an entry below the Bollinger Band main. In fact, that harsh winter was so bad that the reversion got us in here, and then this thing started doing this, and it never failed, and it was grinding upwards so long that eventually this thing turned around and then gets us out up here. That is it went far away from the mean and reverted back to the mean and then kept going the other way, and then the reversion to the Bollinger Band mean got us out here. That exit gives us the maximum amount of time to let this thing just keep going and finding new reasons to stay long. That, by the way, was a really good idea after the COVID melt. The harsher the winter, the better the reversion to the mean. Once it gets going, that long-term slow mean is good. That's also the idea behind the 200-day moving average as a exit. Only you would have given back so much after. So the Bollinger Band mean 30 to me, the BB mean, is a great way to play the managerial exit in the most conservative way that I can imagine, right? Now, there are other ways to do that. You could then say, what about if I just take, at some point, if I take the edge of the river, and now what I'm going to do is say, I'll just take the edge of the river, and now I will preserve this extra little bit. Check or hold? I'm still just deciding which conservative, 100% mathematical, managerial, conservative exit to take with 1/2, and then that frees up my sniper to be as discretionary as I want on all of these reversions, and I want to lock in that extra piece. But then I know that as long as I'm above the managerial exit and I get a cotta 2, I can just re-enter with a cotta 2. And now I can start using the sniper to gather these little short bursts as long as they're working. And when the cotta 2 no longer works, I've gotten the most extra value out of my aggressive stop and re-entry, knowing that I had the confidence and the comfort of the managerial exit to take care of me on that one. So by just dividing, the Wu-Wei exit strategy says, if I just pick the appropriate model inside here with best practice, and I get the blended return, I don't ever have to worry about whether to be aggressive or whether to be conservative, because I'm doing both of those. Now all of my cognitive effort can be put onto two decisions. The first decision is, which is the appropriate conservative reversion to the mean strategy to use? Is it the previous bottom of the RL30 or the RL10 or the ratchet? Whenever you see me ratcheting stops up, that's my conservative move, and I've just got that thing locked in. Maybe that is simply I'm using how much of that money is mine, and just make a declaration of intent and say, there it is. I'm never giving back that money. And then you just leave that wedge in place until the conservative strategy passes it, and then you say, now I'm ready to lock in another piece. And now I can accelerate my conservative strategy by locking in pieces. That's how you improve that. And then you just wait for him to come along and say, oh, this thing is still working. It's working so long that guess what? You never needed that wedge. You didn't know that back here. So you just decided, I'm going to preserve that gain because this thing made an accelerated move. So I'm just going to respect that and lock it in. And then when this tells me it's time to think about raising it again, you do so. And now you can use your Now you can start use your trader quality number to say, every time I get an asymptotic move, how can I lock in the 2-bar low? Lock it in. Just say, that's mine. And just leave that in place until your long-term manager comes up here. And then if you never got out, then your manager can say, hey, you see, you should have trusted me because it turned out I was okay. Yeah, you didn't know that back here, manager. That's fine. And then on the other hand, if you get these other ones where it starts to roll over and you just decide to strike, that's your sniper. I would start with this idea that if you know your entry patterns really, really well, just look at it from the other side of the trade and say, what are the entries on the other side? Those are your exits on the position you're in. Because you're going to start telling yourself, I gave back enough that it's already starting to be a confident entry on the other side. How much more of that was I going to give off? Another one is, what is my average win in this pattern? And I've got an exceptional gain? Am I ever going to let that go below average? No. That's when you're going to lock in your 100%, 80%. 80% of your time ought to be answering your own question on that one. What are the rules of your workshop? Start with the entry going the other way, known patterns like 1, 2, 3, the dragon horns. How much money from my maximum favorable excursion am I giving back? Where is my open risk compared to my locked in gain? And think like a mountain climber. Start locking it in. Then it's the relaxed mechanical ones. Bollinger Band mean, edge of the river, last hump of the dragon. On an above average win, you see me saying, look, like I got more than a 1R win. How often have you heard me say the leading edge of the dragon? Don't even let it penetrate the dragon. And so your two, it might be BB mean for 1/2. And then at some point you engage your sniper. God, I can't use the right color, sorry. Your dragon. Come on, dummy. It's the orange.
And when are we talking about price versus RL? You know what I mean?
Oh, on this one, if I have more than 1R, this is price. Done. Price. Why? Because I'm better than an average win. I've already locked in one. And now this is where the 1R win would be. Here's my average win, 0.6. This is price. That's money. Because I'm up here better than 1. Until your average win is better than 1R, and you've got better than 1R in hand, and this price is coming back, and the dragon is here, right there. Try that 100 times and see how you feel. And see what that does to your average win. Price. Here's how you know that it's time to invoke this. The RL10 rolled over. It should be blue, sorry. The RL10 rolled over and crossed the baby dragon, which is the SMA3 of the RL10. When that happens, you already experienced peak. Oh, because that's your emerging dragon. That's the evidence that the trend has resumed. So now you have from this moment until the edge of the dragon that's where my sniper judgment for striking really is. And I'll tell you what, if I had that and I let it come out of the southern skin of the dragon, shame on me. Trader discretion, and I better document why did I let it get to there. And you've heard me say many times with regret, well, I believed in it and I settled for the 1R win. Oh, which is still already better than my average win. This little peak crossing the baby dragon, and before it gets to the edge of the dragon, that's what the sniper in me is always thinking about. And I'm doing it with one half the position. And then that Bollinger Band mean little guy was cruising along here. And anymore in my life, I'm so confident on my re-entries that when I take it, I take all of it. And yeah, this stop was in, but I just decide, you know what, I'm going to take the whole damn thing and I'll listen to my manager bitch and moan. Fine. Fine. You did your job, manager, by letting this thing have a moment when it could have an unusually large win. That's when I bring in the fireman and the sniper to take over. When this thing was in SSC and just starting to monkey around, let the manager take care of it. As soon as that thing gets above 1R or an average win, then start worrying about your discretion. Until it's gotten above there, just let the rules handle it. Reduce your cognitive complexity. That's what I would say. Rules of the shop. I didn't have the full screen open up, so I didn't really. Let me see. Is Jeff? Okay, it's still us guys that started with the foundation, so it went a little bit longer on that. Hey, let me take a quick break and see if I probably chased away the creativity guys. Jeff was
No, no,
going to.
no. We're all here. Same crew.
Okay, same group. Okay. All right, well, then let's just drive on and finish up the next. You got 20 more minutes of my time. Unless, well, actually, Chun Long, you're here for creativity as well, right?
Yes.
So I will respect your vote. I mean, we could, if you want to do your, if you guys don't mind taking about a 3-minute break so I can get some more coffee, let's just come back and then we'll roll right into creativity. Hey, so while I'm doing that, I'm going to hit exit in order to let it start producing the video and then restart it right away for the creativity. And we'll do Chun Long and then Jeff may end up showing up. Okay? So thanks for hanging in there. Was that helpful at all, Greg?
That was awesome. Thank you, Ken.
Okay.